to the home office, so you don't have to see this behind me. But until then, probably got another 6 months. Bugs, my eyes are burning from Nate's obnoxious emojis. Was it a telegram or something? Oh my goodness.
What, you didn't see my
Most
sweet message?
obnoxious thing I could find a telegram. That is hilarious. That is awesome. How's everyone doing today? If you guys were on yesterday, who was not here yesterday, actually? Anyone wasn't here was anyone here not here yesterday?
Was anyone not here yesterday? Is that the question? Is that the
Was
official
anyone
question?
who is here was not
Not here.
previously
Perfect.
one day ago? Let's try to make it real confusing. I'll just do this. I'll just show you this again, guys. Today's, couple days down in the markets, in my opinion, to be expected. Nice, Mike. To be expected, guys. We talked about this yesterday. Put to call ratio was at an extreme overbought level. It's not a bad thing. It doesn't mean that there's going to be a crash. It just means that the engine's running hot, right? We just did a drag race and ran at 110 million% RPMs. And there's no percents in RPMs, but you get what I'm saying. We're cooling off the engines right now. And I told you guys this yesterday, right? Over our RSI is overbought as well as this bespoke indicator. Our CPC was overbought. So calling for a cool off zone over the next couple of days. And we're getting that today. So nothing to be worried about. Yesterday actually ended up being a pretty strong day for a cool off day. It was down, but it was a green candle open to close on the NASDAQ and basically break even on the SPY. So today we have a little gap or a gap fill kind of going on right now from the open, but we are down slightly. I'm not too worried right now. Tom, should we close out of the T must trade? You can if you want to. Tom, I still have mine open. I know some people told me yesterday that they took profits when it was up like 60, 70%. I've still got mine open. But for the shorter term one, Tom, yeah, you may want to just because I do expect this cool off to continue for a couple of days. But nothing to be worried about. Nothing I'm concerned about, at least. Again, we still have a very healthy, happy market overall, but yeah, I shouldn't say over the last few weeks, but it has been very extended to the upside. I do have a little something to show you guys because actually it's hilarious that this is happening yet again. Check this out. Bitcoin, I've been talking about Bitcoin pretty much every day for the last week or so, maybe a little longer, actually, probably a couple months or so. But look at this, guys. Overnight, Sunday, right? We saw that big pop to 107. This is the futures markets / BTC in Thinkorswim, and then sell off. Again, we're seeing this big pop. This was yesterday. Uh, excuse me, Monday to Tuesday overnight. Big pop, 107, sell off. Again last night, 108. Small sell off, and look at Bitcoin going again right now. I do think, I mean, the question is the market's up or down today? Markets are down. Bitcoin is looking really strong. And I think this is just showing us that it's ready to go. It's primed to stink and hit new all time highs and run from there. I saw in some sources, and Jeffrey, you'll know better, but some people on Twitter yesterday were saying that Bitcoin it had its highest weekly close ever. I didn't see that on my end.
I mean, every exchange is different, so it really depends on what exchange that you're referencing. So that's one of those things. It's like Forex. There's no unified price on Bitcoin. So we talk about the price on Bitcoin. It could be. It depends on which exchange you're referring to. So was it the highest close on Coinbase? No.
Gotcha.
Maybe on Binance. Maybe on one of the obscure exchanges. I don't know. There's
Gotcha.
usually like about a $3,000 difference in price between the different exchanges. That's an arbitrage opportunity if you had the money to arbitrage between exchanges.
That is kind of cool. That would be pretty sweet. But guys, point of the matter here is that we're right there. We're right at the all-time highs. If we get a break above, I think it's really going to start running. In fact, I'll show you guys something here really quick. Then I'm going to turn it over to Jeffrey because he's going to show us a cool way to get options like gains without actually having to use options. But I really do think that Bitcoin could start running from here. And obviously, you guys have seen the headlines. These are some of the analyst predictions: 300,000, 350, 500,000. Larry Fink, who may be a little bit biased, given that he has got the biggest ETF out there. He says 700,000. I think he's a little biased. But I do think that $150,000 is definitely within the equation, not very far away from where we are now. And we're kind of seeing a lot of catalysts come together, right? We've seen the governments buying Bitcoins or creating the reserves. Texas, there was news with Texas yesterday. They're trying to set up a strategic reserve. A lot of countries going in on Bitcoin, which is new. Technically speaking, Golden Cross with the 50-day crossing the 200-day moving average. Look, typically Golden Cross, that's a good thing. Golden Cross, that's a good thing. Golden Cross, good thing. So we're having it again right now. There's fake outs when it crossed the other way. So don't look at that. Look at when it's crossing above. It's a good time to be going in on Bitcoin. Another cool thing that I just saw too is the volatility range is compressed again on Bitcoin. So while it has been chugging higher, we're not seeing the huge, massive volatile swings. It's just been chugging higher. So the volatility is really compressing. Every time that's happened in the past, typically volatility returns to an explosive move to the upside. So we have the third one over the last year, really since the halving. That you could probably highlight this one here too before it went higher as well. But very, very good time, in my opinion, if you're not already in Bitcoin, and I know Jeffrey's tried his hardest to get you in. I've done my best. Nate's given his best effort. If you're not already in, you need to probably act now, or you'll probably miss out on this next run up. Yesterday we did a free trade on IBIT, gave you guys call options and an elite spread to take. So if you missed yesterday's class, just catch the recording after today. And it works in any regular brokerage account. So it's not like you have to get a Coinbase account or a crypto wallet or anything like that. No, thankfully with the ETFs and the options on ETFs, we can just now trade it like we're trading SPY or QQQ or Apple or Amazon, any normal ticker. So make sure if you missed yesterday's class, go back and catch that trade. You'll also get my full market analysis, which again, I called this cool off zone. You can see the full details of what I'm anticipating there. With that said, Jeffrey, do you want to pop
Wait,
open
hold on.
the
Before you
screen?
get to Jeffrey, I have to ask a leading question. Which, well, first of all, I'm curious if Jeffrey's as optimistic on the Bitcoin opportunity as we are, because I really think over the last month or so, seeing what Bitcoin has done, kind of acting as a more stable store of value, but still being kind of leading the charge on the risk on environments, is pretty incredible to watch it go. And also, like, I'm someone who believes there's no such thing as Bitcoin being overextended. When it's overextended, it normally just goes on its next squeeze, and then eventually, sure, it corrects, but it's like way past when people start calling it overextended. But I'm also curious, and I know you're going to get into this, if you've been talking about like the supercharged trades, basically trying to get big returns without going to options. And I think this is really fascinating, particularly for Graham and I's audience, because we often talk about like why regular calls and puts are so brutal. You're paying for the time decay, you have to get timing right. And so our solution is often trading spreads. And that brings in other, complications of, margin accounts and people who are, still not level 2 option traders and different things like that. So I think particularly for our audience, a more simplistic way where you're not battling time decay, but you still are going for those big gains is going to be really interesting. So excited to hear that. And number two, I'm curious if you have any of those that are crypto related. If you agree with us that there's still lots of opportunity left here.
So it's kind of I just got done talking about this on my morning show that right now, because of the straight up move we've had with just small little consolidations off that low that we made just, seems like a couple of weeks ago on Bitcoin, I really want to see a healthy pullback just right now before we break out in earnest. Now, if we go ahead and break out, I think we might limit the upside to only about 120,000 a coin before we potentially run this course out a little bit. So I want to see a healthy pullback. Now, we could run on up to 115, do a healthy pullback, and then continue on higher to my bigger targets, 150 to 170, just based on taking the move that we've seen in every halving event in the past. Halving was last year. For those that don't know, it's like, has to do with mining and the expulsion of Bitcoins from mining. Every halving event we've seen in the past has resulted in at least a 1272 extension, if not a 1618 or a 272. Now, 1618 has been reached every time, and we've come up shy of that this time, and that would play out right around 150 to 170,000 right now if we did that extension.
Do you think that any of that upside is limited now that Bitcoin seems to be taking this more robust institutional asset, or do you think all the same, everything still applies?
Well, I think I think chart patterns rule the day. I mean, it's you can say whatever you want to. We're going to have another crypto winter, despite what everybody wants to expect. I don't think this time's any different. The narrative keeps changing. I mean, everything's the same as we've had every time in the past. Everybody gets excited. We're going to make it a new asset. It's going to, the only thing that really changed this halving event is now with this last halving event, Bitcoin is more rare than gold.
Hmm.
The rate at which we mine gold and put it onto the market relative to the gold supply is actually faster than the rate at which Bitcoin is being produced into the market compared to the Bitcoin supply. That's the only
Interesting.
big change we've had this time in this halving. And next halving that occurs in, it'll be 2028 when it occurs, that'll make it even more rare than gold. And that's kind of an interesting, we've never had an asset ever in the history of the world that's more rare than gold.
Yeah.
So this presents an interesting opportunity long term. So if you're in it to win it and you're like Michael Saylor, 21% a year, you don't care about the big drawdowns in between, you can just buy it and hold it and stay on it. Long term, it's probably going up to crazy numbers. I mean, I can make the case for even Kathy Wood's 3 million of Bitcoin. I mean, how long is it going to be though? It's probably going to be the 2040s, maybe somewhere out there before we get that high.
Yeah, but in the medium term, basically, you're looking at it from a technical perspective. How much room is there on the chart? You don't think that, because it's been, like Graham said, ATRs have come down. It's been a little bit more stable. It's gone up on red days. None of that for you really changes what the medium term upside on this particular leg is.
Yeah, so it's an interesting thing that we usually see Bitcoin make its move about 2 to 6 weeks ahead of the market
Mm-hmm.
breaking on out. And now we're seeing Bitcoin push that prior high that we set back in January. And the market's a little bit lower than that. Market being S&P 500 is generally the broad market when I refer to the market. So maybe we're 2 weeks behind on S&P 500. But eventually, both the market and Bitcoin are going to need some sort of pullback, some sort of healthy pullback to be able to extend even farther to the upside. So I'm cautiously optimistic to the upside, I guess you might say, cautiously bullish.
Nice. I like it.
Now, as far as you said, supercharged tickers, I mean, we have BITX and BITU. Those are both, I actually think that BITU might outperform BITX as far as a supercharged ticker on a leveraged way to take advantage of Bitcoin to the upside without having to buy options or worry about time decay or worry about expirations or any of that junk that you have to worry about when you go long options.
So, why do you like BITU better?
It just has the last pullback, getting into the technicals, leverage tickers outperform to the upside and the downside. If you get we just got about a 30% pullback in Bitcoin. BitX got about a 60% pullback.
Right.
All right. It's a 2x leverage. 2x leverage cuts both ways. BITU didn't perform as greatly to the downside. So it didn't do as much destructive damage to the underlying asset and the net asset value as BitX did. For whatever reason, it's, everybody thinks leverage tickers, they're all the same. They're not. Their management styles underneath how they get the leverage is completely different on every brand of one of these leverage tickers. And even, in the same company, like ProShares or iShares or, VanEck or whatever you want to look at that produces one of these leverage tickers, even asset to asset, they have different management styles to get that leverage. And where they put the extra money, whether they're getting into calls or getting into treasuries or getting into something else or staying just in the asset. There's all sorts of different management styles. And BITU seems to have managed a little better through this pullback that we got in Bitcoin over the since January.
Nice. Well, I'm excited to hear kind of how you break down all these different leverage, opportunities, how it works. Because obviously, I've maybe traded a handful in my whole life. I don't really understand like what you're talking about in terms of I know some of them have synthetic strategies behind the scenes and this, that, and the other, but definitely not my cup of tea. But like I said, super, I think, pertinent for what Graham and I often talk about, not fighting regular options for those big gains.
Yeah.
Yeah, I'm looking forward to hearing kind of what you've been working on, how it all works, and what the timing, the opportunities, all that good stuff.
Yeah. I mean, think about it. When you go long options, you were already kind of hitting on it. Graham, Nate, what are the big problems when you try to go long options? What are all the things you got to get right?
Timing, expected move, implied volatility, all that.
Yeah. I mean, you got to have a direction first off before you even, are you trading calls or puts? You got to have a direction. And then what's your target? How high are we going? So you got to do that so you can get a strike price. So, calls and puts, then we got to have a strike price. Now, how fast is the move going to happen? And we got to have that exactly right, right? I mean, like, is it going to take a month? Is it going to take a week? How far out are we going to be able to buy? And then there's that pesky implied volatility thing that maybe the options are overpriced for the move that you expect to happen. And you could buy that option, be exactly right on timing, price, direction, and still get crushed on IV.
Yep.
We've seen that recently on PLTR, where a lot of traders bought those 95 calls. When we're in the dip, we ripped right back up, and that monthly options expiration hit, and those 95 calls were down 38% from the bottom,
Yeah, it's crazy.
even though it went right up to 95.
Yeah. Yeah. Well, and like like a lot of people who trade options also there's things that don't move. Like overcoming that expected move is one big thing. Like you said, they think they're trading at the strike. What they're really trading against is the expected move that's above that strike. But then the other thing I think people maybe don't realize until they're in there is you buy an Apple call, spend $1,000 on the call. Apple shoots up 1% the next day. Okay, great. Your call is up 50%. But then the next day, if it doesn't keep moving, now all of a sudden you're up 35%. And the next day it's sideways again, and now you're up 20%. And you kind of realize, like, oh, wow, with a regular call, I need to go up in my favor all the time or I start losing value immediately from that trade. And that's like a painful way to manage trades that, where you need the market, like you need your particular trade to be moving in your favor constantly at all times, or it starts being less valuable to you.
Yeah, so with these supercharged tickers, when Apple takes a break for a couple days before the next move, there's no, like, it doesn't move.
Right.
So, like, these supercharged tickers just pause with Apple. And that provides a huge advantage for a lot of people that don't want the stress of when to get in, when to get out, how fast to get in and out. Did I catch the move and got to book the profit and then recycle it? I mean, it gets to be a lot of stress. And a lot of people don't like that swing too. Like, you're up 50% today. Now you're down and you're only up 35% tomorrow. And then you're down and only up 20% the next day on something that didn't even go anywhere.
Yeah.
And
another
I've
really, sorry, I was gonna say another really big benefit to going off what you guys are saying is, like, it's not like, I mean, I'm not gonna say this could never happen because obviously it could get, anything could get delisted at any point. But like when you're wrong about options, you lose 100%. When you're wrong about the supercharged tickers, you're not losing your whole stake, not losing your whole investment. That's what really is pretty appealing to a lot of people, I think, right now, especially with how volatile and uncertain things have been. We got some people in the chat talking about Progressive, which is a trade I have on right now, which it's been a great stock, been doing awesome for me, and it happens to be going against me this week. And if I'm wrong, I'm losing 100% of my investment, which is the risk I take going into it. But with these supercharged tickers, you don't have that same risk.
Yeah, and they're not available on everything, but there are more almost every week. And in fact, so far this year, we've already produced, like, the SEC's already approved almost as many as they approved all of last year.
Oh, wow.
Think about that. So these are really ramping up very quickly.
do you trade some of the inverse ones? You trade both directions on these, Jeffrey? Or
both directions. So, you're worried about the market going down. There's these supercharged tickers that go up when the market goes down. There's, I'm in a couple right now looking for financials to do a little pullback. And so that's one I have in the record right now, looking for just a small pullback in financials, but I want to make some money on that pullback.
Yeah, that's cool. And then, like, I think what a ton of people struggle with regular options is just exit and trade management, because you're not normally trading the underlying, you're just trading some perceived value of the option. So with this, I assume you're using your market math, your trade structure, you know exactly where to get in, where to get out. You're not guessing based on the values or anything like that. It's a lot more, I assume, straightforward trading from a structural standpoint.
Yeah, so the way most of these work, most of them available are 2x leverage, and there are some 3x, and there's at least one 4x that's available. And what I
not
usually
to be
do,
confused with Forex.
four, and the number four times leverage, and not 4x as in as in currencies. But when you look at it, for most of the 2x leverage, like recently I did HIMS, and it was breaking out. I was looking for about a maybe a 30% upside on HIMS itself using my standard technical pattern that, Nate, you helped me launch my original technical pattern. It's the same technical pattern I use for pretty much everything. I was looking for about a 30% upside. So I go to HIMZ, which is a 2x leverage that
I
recently
had
got
no idea
introduced.
until just now that even existed.
HIMZ just recently got introduced for HIMS. It's a 2x leverage. So all of a sudden you can look at a 60% upside on that same move right there.
Wow.
And
You don't have to
actually,
worry about time decay. Don't have to worry about expiration. Don't have to worry about
right.
options going to zero. Yeah.
Well, and like you
And
did
I,
that Tesla trade when we did like a while back.
Oh yeah.
yeah,
And which by the way, I
You still
have
have it, Nate?
TSL. I still let's see.
Uh-oh.
Hold on. Let's just brag. Let's just brag for the
Uh-oh.
audience here. You got to
I
do it in
sold
real
it,
time.
Jeffrey. I sold it.
Uh,
And now
I'm
Nate makes
up
fun of me every day.
44,000, up 45,063 bucks right now on my TSL. On I don't even know how many shares I have of that. What do I have? I have 7,000 shares of TSLL. But like that's a move where, you know, trading Tesla directly, trading the options, the risk reward dynamic really changes versus that $7 price. I could buy a couple thousand of them, sell 500 off when it bumps 10%. So, you know, I mean, like there's just so much more control. Is that how
yeah.
all of them are? Like almost every single one is lower price than the core asset?
They're, almost all of them are priced lower. There's a few that get a little crazy. Then they usually do the standard stock split and bring it back down to reality a little bit. Like FAS, which is a levered financial ticker right now, is priced a little spicy. I think
Okay.
they're planning on doing a split on that one before too long. I think it's up in the $180-$200 range. We saw like MSTX go absolutely nuts, which is a 2x leverage on MSTR MicroStrategy. It went really high, and they had to split it and bring it down a little bit. And so it's these things go through ebbs and flows just like everything else in the market. But their leverage can really crank up when things get moving, especially those 3x leverage and the 4x leverage. But on the downside, if you get a 30% pullback on something with a 3x leverage, you're looking at potentially going 90% down. So you got to be really cognizant of the moves that go against you
Mhm.
when you trade, especially the higher leverage tickers.
Yeah, makes sense. And any you've been trading actively lately that you like more than others, or are you basically kind of scanning and just whatever hits your patterns, that's what you're trading?
Yeah, so I have a brand new scanner that I've built that looks at the dark pools for these large orders that come through. We're going to talk more about this with Sarah here in a minute, but that kind of tips me off to when big players, a lot of us have seen the sweeps scanners, and those can be hit or miss. We've all trying to kind of try to play them and figure it out. But I've found that there's these big, we're talking 100 million, 200 million, 500 million, even billion-dollar orders that go through in the dark pools. These are share orders, and some of these players are willing to pay $1, $2, $3 more than the actual market price to pick up these shares in the after hours in these dark pools. And that kind of tips me off that maybe I should look for a leverage ticker to take advantage of that. And you can even get into the leverage ticker after hours because we're just trading shares.
Oh, I
And
didn't even think
then,
about that. That's cool. That's a whole other
yeah.
advantage. Yeah, you can actually sneak in after. Wow, that's actually I never even thought about that. But that's a big kind
So
of sneaky advantage of doing that.
there's this whole different way to approach this market right here, and I've created this scanner, and it's out there, and it tips me off to these big moves that big players are making. We're talking hundreds of millions of dollars flowing into a ticker after hours or in the dark, in the shadows there. And if they're willing to transact above the market or even below the market, I've got a scanner that tells me to warn me if something might be going up or going down. We've seen it go both ways. And like I said, Sarah and I are going to break down some of those instances and examples that we've had just recently in the markets.
All right, cool. We'll let you do that. I now realize though now that if it's ever 5 o'clock and I want to do one of those and I can't trade the option, I just need to
For
slack you
sure.
and tell you to give me the leverage ticker I should be trading instead. That's actually genius that you can do. You kind of sneak into some of those higher leverage plays where you normally can't trade options. That's a cool part of the whole process that I didn't even consider when I was kind of going through all your stuff.
Yeah, my followers and I have been jumping on stuff like Apple and Google and all these after hours, especially when the earnings came out. If you get a gap down on something, you're like, oh, well, that's just bull crap. You can jump on the leverage ticker. And then when it's up in the next morning, you just made, you know, 10, 12, 15% on a little hiccup that happened because of earnings.
Yeah. Well, I love it. All right. So guys, if you wanna buckle in and learn kind of how Jeffrey's doing this, why the leveraged ETFs work the way that he's doing it, where you're not just taking advantage of kind of some of the base ideas like we talked about, not fighting time decay, all that kind of stuff, but what's going on behind the scenes that he's actually jumping on. That's what him and Sarah are going to break down. Kind of the scanner, the dark pool stuff that triggers all of that off. And then I think he's going to cover a couple of the ones that we've seen recently, some of the advantages that you might not even realize kind of behind the scenes of trading this way. And hopefully you guys all learned something, because I know just literally the last couple of minutes I've already learned. I mean, Hims had a leverage ticker. Who knew? So guys, as he goes through some of these examples, because there's a whole bunch of really powerful examples that you're going to learn, just take a little notepad and jot down those tickers so that you kind of have a little bit of start your own list of some of the ones to keep an eye on, because there's a whole bunch, like I said, that you probably don't even realize exist. I certainly had no idea existed, that you'll learn about. So jot those down. And then, obviously, once you see kind of behind the scenes why, someone might put $1 billion into a specific stock after hours in dark pools, I think it'll be pretty obvious why someone would do that, which is also like a very key part of what Jeffrey's been doing.
Yeah,
Yeah,
we're gonna give out about 10 tickers, I think, and then I'm gonna give away one trade that's open right now in the track record.
Nice.
I had 4 trades open yesterday. One closed out this morning. One hit the target this morning and it's closing out. So I got
nice.
3 more trade. I got 3 open trades that you can potentially take advantage of if you stick around to the end. So make sure you stick with me if you want to know all about these things. And didn't mean to cut you off there, Graham.
Oh no, I was just gonna say, guys, as he goes through these slides and shows you some of these tickers, feel free to take screenshots so you can trade those for yourself as well. I know you might feel like you're scrambling writing them all down, but just screenshot it, take a snippet of it. It's gonna be a lot of value in here. Jeffrey, my favorite thing about I mean, it's a win-win double whammy kind of going on here. Not only are you trading these leveraged tickers, these supercharged tickers that you don't have to worry about options or anything like that. But the dark pool thing is actually my favorite part of what you showed in here. And so, guys, when he gets around to the dark pool part, pay extra close attention, because he's not just looking for orders. He's looking for very specific types of orders that come to the dark pool, which I think is really cool.
Yeah, it took me a few months to work out what exactly to look for in those dark pools. Like I said, we've all kind of played the sweeps, and it's hard to tell what the devil somebody's doing with options in a sweep. Like, are they actually buying it? Are they selling it? Are they, what are they doing? I've kind of spent several months looking at these dark pool orders. Shares trades, you're either buying or selling. There's not other stuff you can do. You're not doing a spread. You're not doing there's no other, you're either going long or you're getting out. And to me, transacting well above or below the market tends to tip me off if you're trying to go up or down. So,
Yeah, I mean, especially
eh,
if, like you said, you're sneaking in after hours and paying over the ask price to get in.
yeah.
That's a pretty high indication that someone probably knows something that you don't know. So yeah, guys, sit tight. Jeffrey and Sarah are going to do this right here. That's why we invited Jeffrey today, to kind of get some insight, something that me and Graham don't really do a whole lot of, or super well versed in these leverage tickers. So that's why we brought on Jeffrey. Hopefully, you guys find this super helpful, super interesting. But yeah, you don't have to go anywhere. They're gonna walk through everything right here in the opening playbook room for you all. So sit tight, enjoy, and chat in if you have any questions.
Awesome.
I've done this for a few years now. Probably actually, I've been trading these since before I came on as a guru, Nate, before you guys hired me. And it's always just been something I did in the background. It wasn't really interesting. I didn't have a way to really put anything to it.